That's right. That seems to be what's weighing on the stock this morning, is the idea that Google is investing a lot in its business, particularly in hardware, in those data centers, and in headcount. Almost 100,000 people now work for Google around the world. So that's a very significant expense they're taking on. If you look at the revenue breakdown, what you can see is that the Google property segment, which is YouTube and search combined, that core part of its business still grew 22% year on year. So the overall theme there is very strong. Other revenues, including cloud and hardware, grew 31%. And then this other bets segment, which is Waymo and Verily, this health venture that Google has, and the self-driving unit, grew 18%. So across the board, strong growth in the past quarter, but the worries this morning are on that future spending.
How much of this company, if we take away all those other bets and all these other things, is actually it's a great advertising company, great search engine, and that's still the bulk of the driver of the profits?
Absolutely, the bulk of the business still
but
driving
the market's
profits.
worried about it spending on customer acquisition costs on, if we include YouTube and what have you, into programming and what have you, trying to make YouTube a premium channel. And that's a worry, because if we're seeing the same thing at Netflix and the same thing with Amazon with Prime as well, and the same thing with the traditional players such as the cable players such as Comcast, the owner of this channel as well, then we're looking at a massive fight for customer acquisition costs.
That's what we're seeing, and that's what's interesting about this report, is it's very similar to what we talked about last week with Amazon.
Yeah.
A lot of strong growth over the past year, and record for Amazon, record profit, but concerns about how much they're investing in these other segments of the business that aren't core. And that's something that investors have a lot of uncertainty about. And it's all about this kind of guidance going forward. There's a lot of uncertainty in this digital advertising market. Google still dominates, Facebook still dominates, but there are signs that competition is increasing, and that seems to be one of the factors weighing on shares here.
They are traveling an arc that technology companies always travel, and then they get to a point where they have to look over the brow and figure out what they do next. Now, this business has, what, $109 billion available to it. A lot of speculation about M&A. Any hints at all about in which direction they may be headed? Because quite frankly, whatever they've bought so far has just been marginal in terms of allowing the elephant to run faster.
That's right. That other bet segment, which are kind of those ventures that Google has gone into, Verily, the health venture, and Waymo, the self-driving unit, that just makes up $154 million in revenue. So there's a lot to be done there. Sundar Pichai on the call said, very cautious about M&A opportunities. It seems that this is something they want to strategically position. They're not just going to go out and buy a small startup to see what they can do. Cautious about what exactly they mean with those opportunities, but self-driving car unit and a health venture, very different ventures that they're taking on there. So a lot of uncertainty about what that could be.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.